The third biggest mistake is not knowing what the break even is in your business. And break even's just exactly that. Break even is the point where total revenue equals total expenses. In other words, breaking even. So when you look at a profit and loss account, you've got income, cost of sales, and then you've got gross profit. And then underneath that, you've got overheads or fixed expenses, in other words, and that gives you a profit and loss at the bottom. So you total up the fixed overheads or fixed operating expenses and divide it by the gross profit margin. There's an example there. And that gives you what the break even is for the month. So in this particular example, the business, based on 40% gross profit margin, would need to make $48,445 to break even. So a couple of pro tips here. Go through the exercise. Work out what your break even was last month. Run your profit and loss for September. Have a look at your fixed operating expenses divided by your gross profit margin. That's a really powerful number to know because it means setting targets seem so much more realistic now. Next, work out your daily break even. This is the number it costs you to open your doors for business every day. So the simple way to do that, in most months, there's 21 business days. Most months, some have 22. So you get the 48,445 and you divide that by, say, 21 business days, Monday to Friday. So that gives a daily break even of $2,306. So if you know that, then you can set a target. You know that every day, at a minimum, your business needs to generate $2,306 of income that day. That all of a sudden plays into your hands because then making sense of the numbers becomes so much simpler because you know what your target is. Look, we just have, at a minimum, we have to do $2,306 per day. So you can start organizing work to exceed those sorts of targets. And that's what I'm talking about there. This is a powerful number and allow you to set daily targets and track daily performance. So if you know that you've scheduled, you know what your break even is, to say it's $2,300, you've scheduled $3,200 worth of work for the team to do tomorrow, and then the next day they only do $2,300, you can ask questions about what happened yesterday. Oh, what happened yesterday? Oh, and then you can uncover some of the reasons as to why your business is losing money and not hitting the targets that were set. Like a bit of experience I've had with that is, that exact scenario, 2,300 is break even. There might have been $3,200 worth of work scheduled. And when the business owner comes to work the next day, they have a look at what work was done and work out, it's actually only $2,300 worth of work. What happened to the other $900? And ask questions to the team, and they work out that one of the team didn't have the right tools when they got to site. So they had to drive back to the factory, which was 45 minutes away, pick up the right tools and drive back to the work site. So, then you've got two people in a truck or a van, spending money on fuel and wasting time driving around, picking up tools that should have been there in the first place.